Hi, everybody. This is Patrick Zielbauer from Infinity Futures. Welcome. It's 3:30 on Monday, April 9th. Thank you, everybody, for coming to the event today. My name is Patrick Zielbauer, and I'll be giving a presentation today about some aspects of Sierra Chart, which we offer and support here at Infinity. Let's do some risk stuff real quick, and then if anybody has any questions related to risk, please feel free to ask. All right, trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. So folks, only fund a futures account with risk capital. It means money you can afford to risk or lose without lengthening your retirement horizon or affecting your ability to maintain your lifestyle, okay? If you have any questions about where you may fall on the risk capital curve, so to speak, whether or not this type of trading is suitable for you given your own specific financial situation, please feel free to have a discussion with us about that. That's not something we shy away from. We are happy to talk objectively about risk. We always do, and we're probably a great place, in fact, to discuss risk of futures. All right, my name is Patrick Zielbauer. I'm an AP or associated person of Infinity Futures. Been working here for going on 14 years now. And at Infinity, we specialize in self-directed futures trading. So we offer systems, we offer CTAs, but the majority of our business are people who are logging into our platform, placing their own trades, using our charting program and our data. And as most of you know, we have settled many, many years ago on a combination of Infinity AT, which is a super light executions platform, and Sierra Chart, which is a charting program that is also super light. And by light, I mean very judicious with the use of your system's resources. And it's a very powerful program. And for those of you wondering about pricing, if you're not familiar with our firm, we offer Sierra Chart for free if you do 10 round turns every 30 days. All right, that's like one buy and one sell 10 times, or two buys and two sells 5 times, or however you do the total of 10, doesn't matter. And if you elect to use the charting, which is optional, by the way, but if you do elect to use it and you do not meet the minimum, then our fee for the use of the charts is $19.95, which is just about half of what Sierra charges directly. So even if you're not active, it's a very, very good deal. If you are active, then you can get the charting here for free. It's a great setup. One of the things we really like about Sierra is that it can satisfy the needs of both the simpleton, like myself, so to speak, someone who just likes to look at things very simply, doesn't need a lot, and it also satisfies those of our clients who are developers by trade or programmers, and they really like to tinker and dig into the charting program. Many of them, or most of them, we believe, love Sierra as well. It's just a great application, and it's getting better all the time. There's a lot of really neat stuff coming down the pipeline. All right. So today's topic is order flow and market profile style alerts. And I don't know if we will be able to get into the automated trading stuff today because I think we might run up against a time problem, but that's okay because the concepts that we're going to talk about with respect to the alerts on the charts can easily be replicated into the trading mechanism. So we will do another event coming soon that really focuses exclusively on managing the trades in an automated format. But we had a lot of interest last week about some profile and order flow stuff. And I wanted to go through a couple of those things and show you how you can make best use of the program. All right. So thanks everybody for coming today. So I have a couple of chart books, 4 in fact, up here at the top. You can see one says IB setup, one says order flow study examples, one says TPO basic, and then one says value area project trading disabled. So I'm going to talk a little bit about each one of these, but I would also like to extend the invitation for anybody who wants copies of these files to feel free to email your representative in our office, whoever it is, and we will make sure to get them to you. You can use them. You can use them in conjunction with this recording, which will be up on YouTube probably tomorrow. And it's a great way to work backwards and learn about the program. All right. So the first thing I want to do is talk briefly about this TPO basic chart. So TPO is another way to say market profile. Okay, time, price, opportunity, market profile, those terms are synonymous. The name of the study when you're adding a TPO profile chart to Sierra is called the TPO profile chart. So it's in this chart right here. It is one of the most customizable charts that you can find in this program. Looking at the settings is not for the faint of heart. Let's put it that way. That's not a bad thing. It's just super, super flexible. And while I'm not going to go 100% in detail on the profile study itself today, I would like to highlight some of the things that traders typically look for when they're looking at profile or numbers bars, or order flow style charts. And then I'm going to show you how you can take some simple pieces out of what is, sometimes a very complicated display and make it simple. All right, so that's how I like to do things. Is when I look at a chart, usually what I have realized over time is that there are a couple of unique points, data points about a specific chart or charting technique that that I find relevant, and then there's like 99 things that I don't find relevant at all. So I'll say it every time. I'm going to say it again here today. Decision fatigue is a real thing in trading. All right, self-directed, especially day trading, it's a real thing. And my effort is always going to gear everybody towards simplifying the appearance of the chart rather than overcomplicating it just for the sake of looks or because you bought some indicators that you don't use anymore, but you feel bad because you paid for them. Okay, we want to get past that. And the objective of these presentations is to help you get the information you need out of the charts and display only that info. So what I'm leading into here is I'm going to talk briefly about the profile chart we have on the screen, and I'm going to comment on what parts of it most of our customers ask us about, and then I'm going to show you some ways where you can display only that info. And then we'll talk a little bit about how we can create alerts and things based on those parameters. So when you look at this chart here, and forgive me, because when you're looking at a chart with a range on it that's this wide, I mean, this is just an incredible trading day. I mean, we start off down here. This blue line here represents what's called the initial balance. Okay, that represents the range of the first hour, typically by default. So for the market to run all the way up and then come all the way back down like it did at the end of the day, creating this crazy distribution, it's just an incredible trading day. It's just a sign that the volatility just doesn't seem to be going anywhere. But that's beside the point. One thing that traders are often looking at when they're looking at profile charts is they're looking at what's called the initial balance. So the initial balance could be, if you're looking at the full session like I do, it can be the first hour of trading in the evening. You could set it so that the initial balance is the first hour of the New York stock market open, which is really the more common way to look at it, and we'll show you how to do that as well. But this is this blue line, or the initial balance, is something that a lot of traders look at. And unfortunately, a lot of traders look at a really complicated chart setup that has a lot of stuff going on just to get this data. All right, so we're going to show you that that's not necessarily, that's not necessary to do that. Okay. The other thing that traders will often look at is they will look at value areas based on either time or volume or both. So on this chart here, this sort of light green teal line here, this represents the value area high based on time. Okay, this represents the value area low based on time. And then the gray lines that you see, the gray text you see between represents the value area based on time. So that means that the market spent 70% of its time in between these two areas, which is really just an unbelievable fact, because that just represents a huge amount of rejection up here, because the market really spent a lot of time up there and still, came all the way back down, which is really quite incredible. But that was an incredible close. And that's kind of why I sound so exhausted. So again, forgive me, but these are data points that a lot of traders will be looking at. All right, and then the point of control based on time, that's where this highlighted area here, this magenta color, okay, this is the price level at which the market spent the majority of its time. Okay. All right, now the volume profile is this thing here. So volume profile is similar to market profile in that you're getting a horizontal histogram, but in this case, we're basing the values based on volume traded and not time spent. So to me, volume profile is actually a little bit more relevant in this day and age because it's so easy to track volume, and it was a lot harder when market profile first came out to track volume because everything was done in an open outcry environment. Now it's not. So a lot of times you would use TPO profile or market profile because there was no way to track actual volume traded at each price, and now there is. So volume profile to me is a little bit more relevant. A lot of times you do see the volume profile value areas and the volume profile point of control match up with the TPO, which is based on time. In this case, it does not. So this is the point of control for the volume profile. This is the value area, this light gray range here, value area high to value area low. So based on volume, we had way more volume trade up here than we did in here. And that's because the market, this profile starts at 5 p.m. last night, and there obviously is not as much trading happening on Sunday nights as there is during the day on Monday. But sometimes you'll see these levels jive and sometimes they won't. In this case, they really don't. One thing that a lot of times volume traders are looking at, or volume profile users are looking at, is they're looking at what are often referred to as low volume nodes. And those can be plotted automatically, but they're very, very easy to plot manually as well. I like to use a study here that's called the extending rectangle. That's what these pink things are. And we'll touch on this a bit. I've touched on it a few times in the last few events. I just think it's a very cool feature and it's easy to use. And basically what it is, and I'll delete them so they go away here just for now, is that you can draw, and I'm going to go back to the pointer here so we don't have that crosshair up. I can draw an extending rectangle, say from here to here, and I could do it again from here to here, and I can do it again from here to here. And what you're seeing, let's just go like this area right here. You can see that those areas are being shaded onto the 5-minute chart that's on the right side. So a lot of times when people are looking at profile charts, they will like to mark these areas up. And sometimes people who are interested in these areas don't need much more information than what these areas provide. And if that is the case, you don't necessarily need the profile chart up all the time. You can just mark your low volume nodes on your profile chart, have that data automatically copied onto whatever chart you're actually using to execute, and thereby simplify the amount of stuff you're staring at on a daily basis. So that's where I really believe Sierra has value, is being able to track these certain data points so that you don't have to have as much up on the screen. It's a way to reduce the amount of processing you have to do in your brain, and especially if you're looking at multiple markets and multiple time frames, it can really add up. Okay. All right. So anyway, the reason I'm showing this profile, because this webinar really is not necessarily about market profile. What it is it's about how to create alerts based on important aspects of market profile. So important aspects of market profile, in my opinion, or volume profile, are the initial balance, the value area high, the value area low, and the point of control. When it comes to order flow, the most important thing that you'll hear in any chat room or video that you're watching at nighttime or something related to order flow is what's commonly referred to as delta. Okay, and delta is going to be the difference between the number of contracts that were executed on the bid, which is considered bearish, versus the number of contracts that were executed on the offer, which would be considered bullish. So that's a gross oversimplification of the idea, but the general idea is that if you're seeing strongly negative deltas, that means there's way more sell orders coming in than buy orders, and people use that as an indicator. So there are lots of ways to display delta. You could look at what some people refer to as market delta style charts or footprint style charts. Or if you're like me, you might just look at the value, just the net value, or a visual representation of that value. So you're not sitting there looking at tons and tons of numbers throughout the day and trying to make sense of it. So again, to me, when we're looking at profile, you're talking initial balance, value area high, value area low, point of control. And when you're talking order flow, you're concerned mostly with delta, or the difference between the volume done on the bid versus the volume done on the offer. All right, so we're going to come back to this chart book here in a little bit, but this is a chart that I put together here that shows the what's called the initial balance along with one extension. So there's actually a study inside the Sierra chart program that's just called initial balance. So if you are a profile person and you want to have like an execution chart that looks like a regular chart, but you want to know what the initial balance is, you don't necessarily need to use the TPO profile chart, meaning you don't have to turn the chart into a profile chart to get this info. All right, you can add the study that's called initial balance and go to the settings section. You can customize the start and end time of the initial balance. For me, I used 8:30 Central Time, which is the New York Stock Market Open, and then I ended it at 9:29 and 59 seconds. So basically, we're getting the first hour. So that's what most people use when they are looking at the initial balance. So in this case, I put those figures in. I didn't really change any of the other defaults here, but obviously there's some flexibility. And then in the subgraphs tab, the only thing I really changed besides some of the colors and stuff was I made sure that the extension lines were accessible. So some people like to plot multiple extension lines out. These are kind of, think of it like a standard deviation below and above the initial balance high or the initial balance low. I just chose to have one of them displayed. So there's an initial balance low extension 1, which is visible. That's right down here. And then if we look up at the top on this side, we'll have the initial balance high extension 1, which is visible. All the other ones are set to ignore. Okay, that can be obviously adjusted. All right. In the settings and inputs here, you can see what the multipliers are. In this case, it's a 0.5 or a 50% extension. Okay, so these are measures that you can use that are kind of like, it's similar idea to a pivot point. You know, the further out it goes, the bigger the statistical outlier it is. You know, maybe you're a version of the mean trader. Maybe you think that if it breaks a certain level that, you know, the bottom's going to drop out or whatever the reason is. That's, you know, how you can have this data displayed. So if you are a trader who cares about initial balance, it's possible to base either automated trades or at least visuals related to the market breaching these various levels. And what I would like to show you in the next chart book is how you might combine these with other order flow style studies. And this is where sort of combining the market profile and the order flow that we referred to in the title of the event sort of comes into play. All right. Before I get to that though, I would like to show this other chart book here that's called the Value Area Project. Okay, so for those of you who are familiar or have seen these events, you've heard me talk about this concept a lot. But the Value Area Project is a way of looking at the market that I have been focusing on for quite some time that basically involves one of those important aspects of profile style charting that I talked about, which is the value area. So the value area high and the value area low, these are based on volume, not time, is again where 70% of the contracts have traded. So the solid line that you see going backwards in red, that is where the value area low is now. The solid green line you see up here going backwards in green, that's where the value area is now. The dotted lines are where the value area was at the time the market, you know, was trading at that specific time. So in this case here, even though the value area is currently at 1523, at 210 or whatever this time was, the value area of this contract, which is the June Russell, was closer to 1525. So the reason I have this displayed is because when I look back in time at these signals, I like to see not where the value area is currently, I like to see where it was then. As an example, this hypothetical or potential short position that the system initiated early in the morning, the value area was all the way down here. It wasn't up here. Right, so it's helpful for me to know the validity of the signal if I could see where the value area was, just not just where it is now. So this particular system, what it does is it generates basically a potential sell order if the market breaches through the value area high, and in the same bar, the CCI or the Commodity Channel Index in this case is over 200. And then conversely, it sends a buy order if you have the system on. This is semi-automated. It can send a buy order if the market breaches the value area low and at the same time has a CCI value less than negative 200. So this is a system that basically combines a traditional oscillator like the CCI, and really you could use any oscillator, with a traditional volume profile or aspect of volume profile, which is the value area. So this is a good example to me of a way that someone could incorporate an important aspect of volume profile and still not be necessarily looking at a volume profile chart all day. You know, we're just taking one piece of the study that we're interested in. And a lot of times when I give these presentations and people are asking questions or, you know, trying to relate this to their own experience, even if you don't care about this at all, the thing I'd like you to take home with you is that it's possible to take the most important data points out of the charts you're looking at, even if it's not related to volume profile. So if you've never looked at a profile chart or a bid-ask difference or delta chart before in your life, there's still some value here, because I want you to think about the most important aspect of the chart you're looking at, and try to figure out a way to pull that data point out and put it on another chart so you're not, being overwhelmed visually, with too much info. Right. Okay, cool. Tom says, I'm coming over from another program. I like to set up initial balance area for the first 20 minutes. So Tom, that's exactly what you could do with this setup here. So if you care about the initial balance, you don't necessarily have to use the initial balance for the first hour. And in fact, in your case, you could go add the initial balance study, and I could just make the initial balance go from, 8:30 to 8:50, like this. Push apply, and then they're going to recalculate based on those values. So this is this is something you could probably make use of. So I'm going to revert this back to the 929, just because I'm going to send this file out to some people I know. But that's certainly something you could do. So you could add the initial balance study and then customize this for the first X number of minutes that you would use. All right. Okay. So again, the value area project. If we have some time, we'll come back to this, but I did want to mention it because I talk about it in a lot of the events, and it's relevant in this context because we're talking about the value area high and low. All right. Now, the other example I want to give here before we go into some of the coding and the fun stuff is this is the same initial balance study, except on this chart we also have what's called a bid-ask volume ratio, which is the bid volume divided by the ask volume. And then below that, we've got the ask bid volume difference bars, otherwise known as delta. All right, now at the top, you see these numbers up here. So these numbers up here represent the high and the low delta of the current bar. So right now, it's the end of the day. The markets all close in 7 minutes. So, we're not going to see a ton of action here. But what you'll see is that if the delta goes positive, that this number will get higher and higher as a new high is made. And then this number will get lower and lower. So these are not current values. These are the highs and lows of the delta. So sometimes when people get into order flow style trading, they end up with these, and I'm not saying there's no validity here, but they end up with these very, very complicated charts with tons and tons and tons of numbers. But ironically, what they're really just looking at the end of the day is one value, and that is, what is the delta? Let me give you an example of that, okay? I made a chart that everybody's got in their book. It's called 2018 order flow, okay? So if anyone who's got our charts has this on their computer already. I'm going to tile these on the screen here for a second so we can see them all together. But basically what happens is when people look at this style of charting, here, let me tile this as a grid. Okay, that's a little better. When people start to look at this style of charting, they end up with these very, very complicated and cool looking charts. So why did I put these in here by default? I put them on everyone's computer by default when they install our software because I want to compete. Because as a salesperson and someone trying to promote our service, I want people to log in and see this and be like, wow, I saw that for sale for this other program for $3,500. It's pretty cool that I can do it here without even talking to anybody. That's why we put this stuff here. Yes, we believe there is validity to this style of trading. It's a very subjective way of looking at the market. Probably not for everybody, but Infinity wants to be competitive. We want to show people that you can do some really neat stuff in this program, but it doesn't necessarily mean that it's not too complicated for most. And in trading, more complicated does not necessarily mean better. Oftentimes, when people are looking at this style of trading, they are looking at very granular data. They're looking at data like this, where they can see, the bid volume versus the offer volume, and you can see where it's traded significantly more bid volume than offer volume via the color coding, and they look really neat. And there's definitely some allure there. Here, this is a volume this is basically a candlestick chart with the numbers bar study on it, and every candle is instead it's its own profile. It's a neat idea. When you look at this candle, you can see that the majority of the interest was up here. All right, that's not a bad thing to have access to. The problem is, in general, is that at the end of the day, most people who care about this are looking mostly at the delta, and they put all this other stuff on it, all these corollaries that end up just complicating things. And when you're looking at these traders who tend to look at this type of data, tend to be short-term traders. They're looking at Renko charts, they're looking at 1 minute charts, or 144 tick charts or something like that. There's lots of bars, there's lots of signals. You're kind of like doing this tape reading thing where it's kind of exciting. It's difficult for people to maintain their discipline in that environment. So my opinion is that if you're interested in order flow style trading, then a nice place to probably begin, or if you're interested in order flow trading and you've already been through the ringer with all these different add-ons to the order flow chart and you're coming back full circle and saying, okay, maybe we just look at delta, then just add the study called Ask Bid Volume Difference Bars. You'll get a nice visual representation of how much volume is being done on the bid versus the offer. You can kind of see it even just by looking at this, that this is a bearish market. All right, and we can create alerts based on this information. So that's kind of what I was hoping to do as an example. I would like to try to create in real time an alert on this 1 minute chart that takes into account possibly the price itself, the ask bid volume difference, and possibly the bid ask volume ratio here. All right, and that's that's kind of and I would like to take you through the process of how somebody might do something like this. So the first thing that I would like to do is we're going to do this step by step, and we're going to do it together. So I have sort of fixated us on this chart. So I would like everybody to to use this for now, and we'll go we'll try to work together and see if we can build something useful out of it. So, and we may not come up with anything, but that's part of the exercise, and that's okay too. At least we're going to learn something about how to operate the syntax in Sierra here. And this is a good example of how to learn how to do this. So the first thing that I would like to show everybody is the backbone of this alert system is a study called Color Background Based on Alert Condition. So when I right click and go to studies, we can see here that we've got 5 studies on the chart. Each one has an ID number. Now they're out of order because I sort of added them out of order. It doesn't really matter in this case what order they're in, but you've got ID 1, which is the bid-ask volume ratio. That's this study. You've got ID 2, which is the bid-ask volume bars. That's this study. You've got ID 3, which is the initial balance. That's these lines. And then ID 4 is the text display for study. So text display for study is what's creating these values up here. So one of them is reading the high of this value, and one's reading the low of this value. Okay, so that's what those two mean. All right. All right, so we've got these 5 studies on the chart. Now, what we're going to do then is look for another study that's called Color Background Based on Alert Condition. All right, so this is sort of like the backbone of how to create these automated signals inside Sierra. And the idea is you add this study, and then we are going to create an alert condition based on X, Y, and Z. So the way to first get your head wrapped around this idea is to do it with a really simple example. And so what I would like to do first is let's use the IB midpoint as kind of our basis here. So the first thing I would like to show you how to do is how to color the background of the chart when the market is below this value. All right, so that's going to be our first exercise. So the way to do this is to first understand how are we going to refer to this particular line when we're typing our code together. Am I just going to write in the alert condition field, when the market is below the IB mid, color the background of the chart red? No, obviously not. We have to use some gobbledygook here. All right. Now, I'm not a programmer. One of the cool things about Sierra is that even if you're not a programmer, you can still do some fun stuff like this. But you do have to pay attention just a little bit to understand how we refer to each piece of these indicators. So every study has an ID number. In this case, the ID number of the initial balance study is ID 3. Okay, ID 3. Now you see that here. If you go to the settings section and you go to the subgraphs tab, you're also going to see ID 3 at the top. What you will also see is that every one of these pieces of the study has an SG and a number next to it. For example, the IB mid says SG8. When we refer to the midline of the initial balance in this case, we are going to use ID3.SG8 as an example. So I use Notepad a lot, okay, like this. It's useful. I usually keep it on another screen, and I just remember I'll take notes. So let me make the font a little bit bigger here just so everybody can see it. So here we're going to say the IB mid is going to be ID3.SG8. So when we are writing our little code here in a minute, that's the way we are going to refer to this particular line. Now, you will use some indicators that have only one subgraph. Okay, if you add a moving average, it only has one subgraph. So that's going to be like ID1.SG1. It's very easy to remember. Some studies, like this one, have lots and lots of subgraphs. And this is why it's important to make a mental note or a written note about which is which. It's going to make your life a lot easier so you're not switching back and forth trying to remember this. Okay, so we've got ID3.SG8 for the IB mid. All right, now when we refer to the current or the closing price of a bar, we're just going to use the letter C. So C equals closing. I'm sorry, I'm really not good at typing, believe it or not. Okay, closing or last price. All right, C equals closing or last price. So when you're looking at the current candle, it's the current price. When you're looking at it historically, it's the closing price of the bar. That's how you refer to it. All right, so in this case, how do you think we would say in like very basic terms involving very basic mathematical symbols if the closing price is less than the IB mid? I want to be told when the current price or the closing price is less than the IB mid. All right, all you're going to do is code it like this. It's just going to be C is less than ID3.SG8. Oops, SG8. That's how we're going to refer to it in the alert condition. So what I like to do when I'm writing these conditions is I will create the text in Notepad, and I will go to the alert condition study, and in the alerts tab, I just paste the code in like that. So here's our first alert condition. It's when the closing or the current price is less than ID3.SG8. We push apply, and then immediately we get a visual response. All right, so why is it this gray color? It's in the subgraphs tab. That's the default color. So if I want to change this, I can make it like this light color. I could even lighten it up more just so it's not in the way, and apply it like this. So when we are looking at this chart, at any time, we will be able to tell that the market is below the initial balance midpoint, even if we have the initial balance midpoint or the initial balance study altogether hidden. All right, this is how you start to work towards a nice clean chart. It's that you get the pieces of the study that you care about, you put them into an alert condition, and then you hide them. There are some cases where having the lines visible are very important, like if you're looking at the trend of a moving average or something that's a little bit more subjective, no problem. But there's going to be a lot of times in this type of trading where really what you care about are the values. You don't care that much about what happened before, or how it looked, or how quickly it got to the level, or if it was a steep curve or not. All you care about is that it's happening. That's the objective here, is to single out those scenarios and clean the chart up a bit. All right, so there's another cool thing there's another sort of very useful application that I think this type of process has, and what it really helps people the most if they are really bad counter trend traders. So for example, if you are really bad at going long when the market is in a downtrend and it continually gets you in trouble, then one way to mentally relieve yourself of the responsibility of trying to make the decision is to decide on some conditions that constitute a downtrend or a down market, and simply don't take a long position if the chart background is a certain color. That's actually how I got into this whole idea in the first place. It was a customer of mine who told me that he created a system where if he was long the market already and he saw his chart turn red, he just push flatten, no matter what. He just push flatten. And sometimes that'd be annoying because he'd be in a trade, he'd push flatten, and then the market would go right back without him. And he felt like he was cutting himself off too early. Or he took himself out of a potentially good trade. But in the long run, he agreed with his original hypothesis, which is that if he is about to go long, he shouldn't go long in that condition, or if he's already long and the screen creates this true condition for his bearish, market condition, that in the long run he's better just getting out over the aggregate period. And what the real objective is to relieve you as an individual trader of the responsibility of having to make that decision. Screen goes red, you're flat. Screen goes red, don't go long. And then we can create an opposite condition for the short side. So screen goes blue and you're short, you go flat. All right, screen goes blue and you're about to get short, there's no short. So it's all about trying to, help you relieve yourself of the stress of having to get in or out of the position, or, weighing these different options in this short, time period that we're all operating, especially if you're trading things like NASDAQ or crude or the Dow or something that really moves, and especially even more so in this type of environment. All right. So Mark says, So I'm interested to hear what you think about that, Mark, but that's a perfectly valid response. I mean, I just had a conversation with one of my most important customers not 30 minutes ago about his struggle with continuing to trade after he has made money, and then he gives it all back and ends up, with a huge equity swing throughout the day. And there are just certain conditions that are not conducive to your own biases. And one way to facilitate the extraction of those trades out of your day-to-day activity is to just throw the baby out with the bathwater. And that's kind of a crude way to say it, but sometimes it's better to just forego the chance to win or cut yourself off a little too early in order to acknowledge your own weaknesses. So that's my that's my opinion. It's been generated after years and years of dealing with people and trying to help people solve this problem. But that's, I'm sorry for going on a bit of a tangent there, but that's the whole reason why we're doing this. All right. So let's go a little bit further. So initial balance. All right. Study number 3 and the IB mid subgraph number 8. All right. Does everybody understand the very basic reference that we're making here with the study number and the subgraph and what they are? Okay. The ID number is the number of the study. The subgraph number is the piece of the study that we're referring to in that study. All right. If you have a question about that, please feel free to ask. Stu asked, can you automate what you just said? And yes, the answer is yes. So the answer to Stu's question is that if we are in a position and some condition exists that now makes the background turn red, can we make that into an offsetting trade? And the answer to that question is yes, that is possible. And we can do that using that study that we've talked about in a couple of the other events. It's called Trading System Based on Alert Condition. And that's when I suggested earlier that if you can do this much, that you can also easily begin the process of developing an automated system based on the same ideas. It's virtually the same, the same process, except one of these things sends an order and another one just colors the screen. So it is possible. I don't know how much we're going to get into that today, but we'll at least make some progress. All right. So color background based on alert condition. Now, this is a great way to filter out a lot of, any long position, let's say hypothetically, but let's go for something a little bit more specific. So what I mean by that is, how do we add a second filter to this? All right, that would be another interesting, thing to start thinking about. Okay, the market's below the IB mid. Let's focus more on not just keeping ourselves out of longs here, but where do we actually see, a good short occurring? And another way to do that might be to look at this bid-ask volume ratio. And here's how we might incorporate that. So let's just say, and again, a little bit of an oversimplification, but we're going to try it nonetheless. All right, we're going to look at the study number and the subgraph numbers for the bid-ask volume ratio. So let's just go to the bid-ask volume ratio, and we can see that it is ID number 1. And if we go to the subgraphs, we can see the volume ratio average is subgraph number 1, and the 0 line is subgraph number 2. So this defaults to a 14-period average. Okay, that's how, if you were to add this to your screen now, that's how it would look. All right. So one way that we could try to incorporate this would be if the bid-ask volume ratio is negative. So basically, it's saying that the average of the last 14 bars has a negative delta. That's kind of a way to put this in English. So not only are we going to be below the IB mid, but there's a bearish trend in volume being traded on the bid versus the offer. So why is that bearish? When someone hits sell market, that's going to be a trade done on the bid. When someone hits buy market, that's going to be a trade done on the offer. So if a lot of people or computers or pension funds or foreign governments or whatever are hitting sell market, okay, that's going to show up as bid volume. Right? If somebody is hitting buy market, that's going to show up as offer volume. So that's the general idea. So how would we incorporate this? Well, what we're going to do is let's go ahead and bring up our notepad. So we'll say id1.sg1. id1.sg1. That's going to be the vol ratio average. And then id1.sg2 is the zero line. So if we want to express our interest in seeing when this value is negative, how do you think we would display that? All right, we would display it as id1, excuse me, sometimes my mind works a little faster than my fingers, id1.sg1 is less than id1.sg2. All right, that's a very simple mathematical operation. All right, now the trouble is we need to combine this with our existing condition. So how do we do something like that? Well, one way to just sort of see the visual, the visual result if we were to do this on its own is to just do another instance of the color background study. This is not how we're going to leave this here for those of you wondering why I'm going this direction, but one way you can do this is to duplicate the study that you already have. All right, I use this button all the time, so I just duplicate it. I copy the new code in here like that, and then change the color so I just get a little bit of a different result. Like that. Okay, so now we can see the result. We're getting a magenta background whenever the volume average is less than the zero line. So we have a negative delta average over the last 14 bars, and we're getting this visual result. But we don't want this to stand on its own. We want this to be incorporated with the existing study. So I'm going to keep the code, but we're actually going to remove the study. We don't need the second study. We're going to remove that and apply the change. Now we're back to how we were before. And instead, we're actually just going to combine these two new studies. So I'm going to take the first study that we had, and I'm just going to put a comma and then paste it here. And we're going to put the whole thing in a parentheses like that with the word and in front. All right, so this is how we are seeing two conditions that both have to be true in order for the ultimate condition to be true. So id1.sg1 is less than id1.sg2. We've already established that. Comma, the current price or closing price is less than the IB midpoint. So there's our condition. So again, I'm just going to copy that, go back to our color background study, put it in, and apply it. And now we're narrowing the field a little bit. So this is a process, and you can add these filters as you come up with them. And eventually what hopefully you end up with is a decent signal that combines maybe 3, 4, 5 filters that you typically look at. The objective being to get you to that intuitive decision point just a tad faster, or at the end of the day, if you want to go down the road of automating it, to automating it. All right, that is possible. All right, so Mark says, is that really how those sellers import their sell orders at market? Not necessarily. I could tell you for sure that we have customers who trade very, very heavily who are using market orders. Most of these markets are very liquid. It's not very expensive for someone to sell 500 E-mini S&Ps at the market. Right? They're going to get filled normally in a normal condition. They're going to get filled all at one price anyway. So, there's some question, some opinion there, but I have personally seen a lot of our clients trade very, very heavily using market orders. This is not like we're trading equity options way out of the money in, Netflix stock or something like that, where you're fighting market makers on 6 different exchanges. This is one centralized exchange, very easy to see the bid-ask depth, the volume depth on the dome, and, the markets are liquid, so they can handle a lot. All right, so let's see, the couple of questions that came through. Dominic says, can you use the ID numbers on indicators you purchased? The answer is yes, as long as they were coded in a way where if you go to the subgraphs tab, if you see that they have created, subgraphs for each parts of the study, then yes, you can for third-party studies, they can still be referred to in these conditions. If a company or a person codes an indicator in a way where this information is like not visible, then there might not be a way to use it in this format. Okay. Okay. Stu says, can you color just above the midline or the midpoint or just below? Not with this study. I mean, there might be some other ways to create. There are other ways to create visual notifications that are not coloring the whole background. Like you could use color bar based on alert condition. You could put stars or arrows or something like that. So it doesn't have to be this background. All right. I'm not going to go through that example here, but just understand, Stu, that and we did document this on YouTube as well. There are ways to display this data in other formats, but this is just the easiest one to demonstrate. All right. So one other, let's try and take it one step further. So this is kind of a neat idea here too, as I'm kind of looking at this. So the ask bid volume difference bars. I wonder if there is a way where we can look at the closing value relative to a prior closing value. So let's try and narrow this down a little bit more. So one of the things that you'll find inside Sierra is that a lot of times if you can spell out in English like what you're actually trying to do, you can probably there's probably a way to do it. So someone might come to me and they might be looking at this and say, all right, Patrick, like here's one you could try. What about the ask bid volume difference is lower now than it was in the last bar. How do you do that? Well, there's a mechanism to refer to prior bar of the same study inside Sierra. So here's how we might do that. So let's first go to the ask bid volume difference bar study, which we can very clearly see here is ID2, and the closing price is SG4. So in our notepad here, we're going to say ask bid vol difference equals ID2 dot SG4. Okay, so difference. Okay, so the volume difference here, the ask bid volume difference is ID2 dot SG4. So one way to incorporate a decreasing or a worsening ratio here, meaning more and more negative, would be if the current value is less than the prior value. This happens all the time. There's an infinite number of uses of this concept inside Sierra. Okay, and here's how you might do this. So one easy operator for referring to the same study except one bar in history, or even 2 bars in history, or 3 bars in history, is to use a little bracket with a negative number in it that represents how far in history we want to look. So if we're looking for a condition like this, where we want to see if the ask bid volume difference now is less than it was 1 bar ago, you would use that ID number .sg4. So ID2.sg4 is less than ID2.sg4 with a -1 in brackets next to it. This means that the study now is less than the study 1 bar ago. All right, so the study now is less than the study 1 bar ago. So this is a new condition that we can then input into our big condition. So I'm going to copy the original here, and then I would just grab this, put another comma in here, and put our new condition in here. All right, now I'll copy this whole thing. We'll get back to our color background based on alert condition tab, and just put the whole thing together like that. All right, so now we're getting even less signals. Okay, so it filtered out more and more and more each time. All right, so this is if we were to pull this, let's say you just came into the webinar right now, and then you looked, the first thing you saw was this, you'd probably go running away screaming, right? No one just sits here and types this out. All right, this is it's a piecemeal process that you go through one by one by one, just doing a little bit of copy and pasting. So don't be intimidated if you see examples from us that look like this, or twice these length, because all you're really doing is taking one piece and applying it, and then another piece and applying it, and another piece and applying it. All right. So Al asks a very good question, and that is there a way to take this result, like this color background result, and overlay it onto like another market? And that is not really on topic. I mean, I'm not blaming you for asking, but the answer is it is possible to do that. And just to kind of give you a quick show of how one might do that is I will actually open up an S&P chart here. Okay, we actually have a study that's called the study price overlay. Man, look at that. That is just goodness. Okay, so study price overlay. So this is another, we did a webinar just on this topic just recently. And you can actually overlay any study from one chart onto another one. And you could even overlay the result of what we've been working on here. So I can actually overlay any aspect of the NASDAQ chart. Okay, you can see them in this list. I could even overlay the background color. All right, and I can put it down here, or I can put it in the main price graph, like this. So what I'm looking at now is the E-mini S&P with a notification of when the NASDAQ's getting its butt whooped. So it's just a very powerful program. I mean, when you start to think about this capability where you can customize the color background study or the color bar based on alert condition study, you can build some really neat stuff where you're not focused on 100 different charts at the same time, especially in this environment where one index tends to take the other ones with it. Yeah, I mean, you could definitely use this as a proxy for looking at the NASDAQ all day. So if you're looking at the S&P and your typical trading instrument is the E-mini S&P, and think about what we're looking at here. I mean, we're looking at the S&P, and we have a full range of volume analysis being done on the NASDAQ, and we're being notified on the S&P chart when that's happening. It's a very interesting and quite a powerful concept, I believe. So the kind of homework for something like this is, I'm not saying you have to do this, for next week or something like that, but the idea here would be to start to write down or type out the aspects of these different time frames and different markets and all these things that you're typically looking at. Because what you'll probably find is that a lot of these things that you have on the screen, you don't actually incorporate in your decision-making process. You just have them up there because you bought them, or because you saw someone else using them, or, who knows, whatever. Sometimes it's hard to let go of this kind of stuff. So, and I'm not saying buying stuff is bad. I'm just saying that there are often situations where something just needs to be dropped, and it doesn't mean you have to throw it in the garbage and dispose of it and never see it again. But there is something to be said about cleaning the charts up a little bit, and there are many different ways to incorporate this type of thing into your game plan in a way that you can pare down the amount of data you're looking at. Even if we don't use the S&P here at all, I mean, when we're looking at the NASDAQ, you can right click, go down to studies here, and you can actually hide this other stuff. I mean, if you really wanted to, you could hide the bid-ask volume ratio, you could hide the difference bars, you can hide the initial balance, you could hide the text display, you could hide everything and just get the visual notification when certain conditions are true. It is a very powerful idea. So does anybody have any questions on, I mean, I know that we could answer unlimited amounts of questions. We only have a couple more minutes, but does anybody have any questions on this idea in general, or comments, or anything that I can answer before we wrap up here? If you do, please feel free to ask. Peter asks, can I combine some condition from another chart for the color background study? The answer is yes. So what you would do, Peter, is you can overlay whatever you want onto this chart, and then it can be referred to just like any other chart. So if you have something on the S&P or the tick, TRIN or crude oil or bonds or something like that, you can incorporate that by using study price overlay, which will put it onto your 1-minute NASDAQ chart, and then it will be in this list with its own ID number and subgraph numbers. So then you certainly would be able to do that. Yes. So the first thing you'd want to do is use study price overlay to bring it over, put it in the right region, region 1, region 2, region 3, region 4, etc. Once it's on there, look for those ID numbers and subgraph numbers and then incorporate them. All right. David, you're welcome. Yeah, good. Thanks. Appreciate that. All right. Skip, can you explain the initial balance and how to use it? So initial balance is basically, you're right. We really didn't, well, actually we did cover it a little bit, but the initial balance is basically a training range, Skip, that is usually the first hour of the day. So the initial balance high is like the high of the first hour. All right. The initial balance low is the low of the first hour. The midpoint's the mid of this range. So the general idea is that some people don't trade for the first hour. All right. I'm not really necessarily in that camp, or I don't believe necessarily people should be in that camp. But a lot of times people will make the argument that, all right, things have to settle for the first hour. And then once that range is established, then you can use these values as areas that other traders are using. So there's a lot of self-fulfilling prophecies in trading, like Fibonacci retracements and the death cross 50 against the 200 period moving average. I mean, even if you don't necessarily use this stuff, you know that everybody else is looking at it, so you sort of have to look at it too, right? This is kind of one of those things. A lot of people do look at that first hour range, right? Is the bid ask for institutional buying? I mean, you could make the argument that it's you're really trying to root out the big boys, so to speak, but to me, it's the order flow thing has kind of gotten blown out of whack, and yeah, you could make the argument that if the bid is just getting pounded, why would you buy that market? But there are some opposing viewpoints there where if the bid is getting slammed and the market is not breaking, that could be an institutional buyer feeding in buy orders to match those bids, which is propping the market up, and that's called absorption, and that could be actually bullish. So that's a situation where order flow, on its own doesn't necessarily stand up, because you could make the argument that even if the bid is really getting hammered, that could take you into a short position, and what's really happening is some computer program or algorithm or some bank or whatever is just feeding in pieces at a time to trick all the people who want to get short into the market, and then they just come in heavy, and the market ends up rallying. So that's called absorption, and it's something that you are looking for when the order flow points in one very obvious direction, but the market doesn't actually go higher or go lower, right? Okay, Skip, the IB low extension and high extension are basically like 50% extensions off of the IB high or IB low. So it's kind of like a pivot point, sort of, where it's like another level up of it's like a 50% move beyond the high, right? So it's just a numerical equation, and you can change those values here. So if I make this multiplier 0.25 instead of 0.5, those values are going to come in like that. All right, if I make it 5, it's going to go way, way off the screen. All right, so the default is going to be 0.5, like that. Right, 50% plus or minus of the range, correct. Thanks, Steve. All right, cool. All right, folks. Well, I think that's probably where we will leave it for now. I mean, I wish I could have covered a little bit more there, but I think there's some value here. I mean, the color background study is a very effective study. I think it could be used in two different ways. It could be used if you have tendencies that you're willing to admit are negative, then you can use it as a way to keep yourself out of a bad position, or a signal to get out of something that that the math is telling you shouldn't be in any longer. More pointedly, if you have a few set of filters, 4 or 5 things that when they line up, you tend to see a significant edge, but you find yourself missing those trades because you're trying to eyeball 5 or 6 indicators at a time. That's another way that you could make sense of this type of study. So hopefully you find it useful. If you have any questions about this style of trading, or you're interested in learning more about Sierra, if you're a customer or non-customer, we certainly would love to have you try the program out. For those of you who are not clients already, please feel free to request the trial of the program. And for clients and non-clients alike, there's going to be some really cool changes happening with this weekly event. We're going to make it a little bit more exclusive. And we really, really appreciate the referrals. If you have folks in your trading group who you feel could benefit from using a firm who will put this amount of effort into trying to help you guys and gals get on the right path, that's how our business is driven. All you need to do is refer your pals to your rep in our office, whoever it is. We do small group training. We can create custom files for you and your trading friends. I mean, we are willing to put way more effort into creating a good experience than anybody else. That is absolutely for certain. We believe that. So we appreciate the opportunity. It means a lot to us. Thanks everybody for your comments. And we'll have this up on YouTube within a day or so. And then we'll be doing another one this coming Monday. So thank you again. I appreciate it. I'm going to read some risk stuff one more time, and then we'll wrap it up. Much appreciated. Thank you all for coming and for your comments. Alrighty. Thank you, everybody. Okay, take care, everybody. Thank you. All right, folks, trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Thank you. Good night.